Hello, friends. Welcome to Career Guidance Bureau. Myself, Dr. Kumudini R. Thakur, would like to say Bureau is very helpful to research students, those who are interested to do their PhD work and major or minor research project or any other related studies about research. This bureau is also very helpful to postgraduate students, those who are doing their MCom or MBA, and to undergraduate students also. Moreover, this bureau is helpful to those students who are going to appear in NET, SLET, or other competitive exams. So, my humble request to you that please subscribe the bureau, give your comments, and do favor for the bureau. Today, we are going to learn objectives of the study. These objectives we can divide into mainly three categories which we are going to understand. So let's begin with objectives of the audit. You know the simple meaning of objective. Objective, you may consider it as your goal, your intention. So you want to achieve some target or you want to verify some situation. For that, you have to do some activities. And for that, you have to design the process also. Afterwards, you can check that that process and activities are right or wrong. Or any other person can also check whether that process is right or wrong and correctly you followed your activities or not. Same is the case for objectives of audit. These objectives we can divide into mainly three parts. One is main objective. Main objective means main purpose. Suppose you join BCom degree course. Why you join? What is the main objective of your joining the degree course? It may be to get the degree and afterwards continue further studies and to develop a career and enhancement of knowledge. And when you join the activity, that time some other subsidiary objectives are also there. Subsidiary objectives means along with the main objectives, you can get other benefits or you can fulfill other targets also. They are known as subsidiary objectives. And the third category is other objectives. Along with these two, you can get other benefits also. You can fulfill your targets and objectives also. So these are the main three parts of audit and objectives. So first of all, let's begin with main objectives of audit. In 11th, 12th, you learn transaction post them into ledger, preparation of trial balance, and in FISY you learn how to prepare books of accounts that you learn. And in TYBCom you learn analysis of that reports. Moreover, you learn that in company, owners of the company are shareholders. Board of directors, they design the policy. And on that policy, second cadre management have to complete the task or they have to fulfill that activities. So owners of the company, they are shareholders. And management is different. They have to maintain books of accounts and generally appointed clerk and accountant, they prepare books of accounts. So they have to check and verify that the books of accounts are right or wrong because number of shareholders are more and everybody can't interfere in this activity. Their main intention is to get proper reports for financial statements. So, to verify the books which the accountant has prepared, these shareholders, they will appoint an auditor. An auditor verifies the accuracy of books of accounts and submits the reports to shareholders. So this is the main objective. Second thing is auditor has to give his opinion about financial statements of audited unit. You know, financial statements includes profit and loss account and balance sheet. So he has to give the report that P&L account, profit and loss account shows a true and fair view. Means this profit is right. Expenditures are correctly entered and about balance sheet that balance sheet and these statements shows true and fair view of all financial reports. So as per the accounting standards, these books of accounts are prepared or not. That also auditor verifies and after verification he gives his report to shareholders. Third main objective is to check proper distinction between capital and revenue nature of transactions. You know, capital expenditure and revenue nature type expenditure, accountant has to classify them. I will give you one example for that. Suppose a company purchased a machinery in 10 lakhs of rupees and for the installation, transportation, company spent 1 lakh rupee for that one. Now, this 1 lakh rupee company spent for machinery and this is for the functioning of the machinery means initial expenditure. So these expenditure, they have to add in the value of the machinery. Means it is capital type expenditure. If you consider it as a revenue expenditure, then the treatment is wrong. Figure may be right. So auditor has to check the classification of expenditures as well as incomes also. So these are the three main objectives of audit. So obviously, when you do audit, that time there is three objectives as a main objective you can fulfill. Side by side, some subsidiary objectives are also there. Among them, first is detection and prevention of errors. So detection and prevention of errors means if by chance the accountant has entered the transaction wrongly, then it is error. Means his intention was not malified and he committed the mistake. And another objective, subsidiary objective is detection and prevention of fraud. Many times, accountant may do some mischief intentionally, or higher authorities may force him to commit the error, and intentionally he is doing. He knows the consequences also. So it is considered as fraud. So basic difference between error and fraud is this. That is the intention of the person. If intention is not malified and by chance some errors are there, some mistakes or misinterpretation is there, then it is considered as errors. But if the intention is malified, then that is considered as fraud. So far as errors are concerned, there are several types of error. Right now, I will give you the list and afterwards we will discuss it. First is error of omission. Second is error of commission. Next is errors of principle. Next is compensating error and clerical errors. Mainly, these errors are happening when you write books of accounts. So these are some of the errors. I gave you the list. Then fraud, misappropriation of cash. It is very common. Misappropriation of goods. That is also very common. And manipulation of accounts. These three types of frauds are the main category. That also we are going to discuss in detail. So keep in mind the difference between errors and fraud and types of errors and fraud. Types of error, among them, first is errors of omission. You know the dictionary meaning of omit. Means you omitted it. Same is the case for the transaction. This sort of errors arises when any transaction is omitted wholly or partially from being recorded in the books of accounts. So suppose you paid money to Mr. X and by chance your accountant forgot to enter the transaction. He has neither debited the amount means to one account nor credited. So completely he omitted this transaction. That time your trial balance will tell and total will be less by that much amount. And another one is partially omitted means you debited one account but not credited another account or vice versa also. That is considered as errors of omission. If accountant completely forgets to enter the transaction, then it is little bit difficult. But if it is a partial omission, then it is easy to find out. So this is the first type of error. Second one is errors of commission. This sort of error occurs due to incorrect record made in the books of accounts, say wrong entries or wrong posting, casting, calculations, etc. etc. Let's try to understand with one example. Company paid 51,000 rupees to Mr. A, and instead of 51,000 rupees, your accountant entered as 15,000. So this is known as errors of commission. He credited and debited right particulars, but amount is little bit different. Instead of 51,000, he mentioned as 15,000. I will give you another example also. Suppose company rented a building and your office is in rented building, and every month you have to pay rupees 50,000 as rent for your office, and you paid, and you consider this transaction as personal transaction. This is wrong, or vice versa. Suppose this rent you will consider as cash transaction or personal transaction, but this is the rent, this is your expenditure, so you have to debit your rent account. And posting errors are also there. Instead of debit you may enter in credit side in calculation, but right now the chances of errors in calculations are very less. Why? Because majority of the companies they use computerized accounting system, and so far as computerized accounting system is concerned, calculations errors generally never happens. Posting errors also generally, once you open the ledger and you debit in one ledger, then automatically in another ledger it will be credited. So chances of this sort of errors are comparatively less in computerized accounting system, but it happens. Third type of error is errors of principle. You know, principles of bookkeeping. And if you misinterpret the transaction or You may not follow the principle and error arises. That time, that errors are considered as errors of principle. This sort of errors arises when the transactions are not recorded in the books of account accordingly to the fundamental and accepted principles of accountancy. So keep in mind and enter the transaction. I gave you the example for rent as it is a expenditure for the company, but you may consider as owner's personal interest. That sort of errors are also considered as principal error. Then compensating errors like compensation. This sort of errors arises when they are counterbalanced. Means suppose you have to pay 2000 rupees to one party and you paid, but you mention as 1000 only. So here 1000 payment is less. At the same time, you have to pay 2000 rupees to second party and you entered as 3000. So total payment is 4000. So one error is compensated by the another error. So this sort of errors are very difficult to find out because each and every transactions you have to check. Then only you can find out these errors. And next type of errors, that is clerical error. This sort of errors arises due to carelessness of bookkeeper at the time of recording the transactions. Suppose he entered one transaction twice, then totaling error, as I told you, that right now in computerized accounting system, totaling errors are very less, and majority of the companies they use software only, and posting errors chances are also little bit less, but double posting errors are happening, and it happens. If you want to find out this sort of error, then also you have to check all these transactions. So mainly these five types errors are there. One is error of omission, second is errors of commission, third one errors of principles, fourth is compensating errors, and clerical errors. So these errors generally happens. If you want to divide these all types of errors into two categories, then you can divide this way: affects the trial balance and not affects the trial balance. When I explained you the errors, that time I told you that many errors they affect the trial balance and many others they not affect the trial balance. So let's try to understand which error affects the trial balance. Then omission of post to an account. So one account you posted means you debited, and another account at the same time you have to credit, and that you forgot. That affects the trial balance. Obviously, your total will never tally. Then wrong posting. Wrong posting also affects the trial balance. Instead of A, you posted in B, or instead of capital expenditure, you consider as other expenditure, means wrong posting. And if it is posting and amount is also wrong, then also it affects the trial balance. Wrong side posting, instead of debit side you mention it in credit side, the affect, because the total carry forward and brought down will be different. Double posting also affect the trial balance. Then carry forward of wrong balance, that also affect the trial balance, because your trial balance will not tally. Wrong side, mistake in total of subsidiary books, you have to prepare subsidiary books, then only you can find out the net balance, and that you have to enter in your trial balance. But if there is any mistake, then your trial balance will not tally. But so far as this mistake in totaling is concerned, now the chances are very less, because it is computer based accounting system. So in that one, this sort of mistake will not happen, because totaling is automatic. So this is the difference between manual and computerized accounting system. Many of errors, they never affect the trial balance. Error of omission means you forgot to enter the transaction. So the total will be less, but it will tally. So suppose you omitted one transaction, that purchased goods of 10,000 rupees. You forgot debit side and credit side. So your total of your balance sheet will be less by that much amount. Error of commission, I explained you. Clerical errors, errors of principle, and compensating errors. This sort of errors never affects the trial balance. So keep in mind the difference between these two types of errors. Our another subsidiary objective is detection and prevention of fraud. Mainly, there are three types of frauds. One is misappropriation of cash. Second is misappropriation of goods. And third one is manipulation of accounts. So chances of first and second types of frauds are more. Among them, fraud is an intentionally deceptive action designed to provide the perpetrator with an unlawful gain, or to deny a right to a victim. Means fraud intentionally they do. Another thing is, fraud means to do the mistakes knowingly with some vested interest in the direction of top level management. So intentionally they are doing some mischiefs. In many Hindi cinemas, you notice this one. In one man army, you notice that army people, their intention was malafide. Then it is considered as fraud. And generally, management commits fraud to save tax liability. In our country, no one believes that to pay tax honestly, it is my responsibility. By hook or crook, they try to avoid the tax liability, to highlight management skill. In this case, what happens? Suppose profit is decreasing, then anybody will say, and it is obvious, anybody can say that management have no guts to manage the business. So what they will do? Profit is less or company may suffer the loss, but they have some hope that within 1 or 2 years they will manage this loss. So what they will do? They will highlight more profit, or instead of loss they will show profit, so that at least they can highlight their management skill to get more commission. Many times this management may have some commission basics transactions, and if his salary is based on profit or sales, that time to get more commission they do this type of fraud to maintain the market price of a share. Means if company is listed in the market, then obviously they can buy and sell these shares in the market. And suppose the management has more than 70% of the shares and they want to sell these shares, then unnecessarily they will do something wrong so that the market price of the share will increase in the market and they can sell their shares. Then what happens? People can understand afterwards. So the price will go down. Then again they will buy. So these malpractices are very common in stock market. And if they are able to do these malpractices, then they can enjoy more profit after selling the shares. And if the price will go down, then they will buy the same share. So management may also do this mischief. Now, misappropriation of cash means this may be perpetuated by complete or partial omission to entire receipts of money or by the inclusion of fictitious payments and of large sums that have been actually paid. Means, suppose one debtor paid money but accountant has not recorded this transaction intentionally and he put this money in his pocket, or he paid 1 lakh rupee and he mentioned as only 50,000 rupees and rest of the 50,000 he paid in his pocket. This way he can do mischief. And suppose company paid only 1 lakh rupee as rent and he highlighted as 1,25,000 rupees. Then this 25,000 rupees he can mug up. So actual expenditure is loss and he highlighted more. So the difference between these two expenditure he can put in his pocket. So cash may be misappropriated by omitting to enter any cash which has been received. Omitted you means you have not mentioned that cash receipt. But right now, majority of the companies, they emphasize on direct fund transfer or more than some amount, suppose 20,000 rupees, you have to pay check only. So this way, up to some extent, you can safeguard your case. And second one is entering less amount than what has been actually received. I gave the example that you received 1,50,000 and they entered only 1 lakh rupees. Means actual received is more and entered as little bit less amount, making fictitious entries on the payment side of the cash book. Suppose company has paid only 10,000 rupees as wages and 10 employees were there, means the laborers were there, and artificially he highlighted 12 laborers and he paid 12,000 rupees. So payment side is more. Instead of 10,000, he paid 12,000 rupees. In other case also, in salary, suppose the person is not appointed, even though artificial person was created, then they pay the salary. This also happen. And entering more amounts on the payment side of the cash book than what has been actually paid. So this way, these are some of the examples, and this way you can misappropriate cash, and chances of this are more. So omitting to entire any cash which has been received and entering less amount what has been actually received. In this case, the auditor should check the debit side of cash book and with rough cash, salesman's report, counter folios of the receipt books, agent's returns, and other original records. Then he can verify this misappropriation. And so far as second one is concerned, means making fictitious entries on the payment side of the cash book and for entering more amounts on the payment side of the cash book. For that, the auditor has to examine reference to the vouchers, wage sheets, salary book, invoice, etc. etc. Then he can find out whether they are mentioned rightly or not. Then third one is misappropriation of goods. Means this involves the pilferage of stock and is very difficult to detect, particularly in the case of small pilferages, unless a strong and efficient system of stock recording. Means in company stock, the number of items are more. And if the person stealing small amount or small articles, then it is very difficult to manage and to verify. I will give you one example for that. Right now, this sanitizers and other things, these are the extra requirement for the office. Generally, per week they use 2 bottles, and they can consider as particularly 5 bottles. Then 3 bottles they can use for personal use. Then it is very difficult because the amount is also very small. Article is also very small. Then under or overvaluation of the stock. So normally such frauds are committed by the top level executives of the business. So the explanation was given to the auditor also remains false. So an auditor should detect such frauds using skill, knowledge, and facts. Overvaluation of stock. Closing stock you mention in credit side of your trading account. If it is overvalued, then obviously your gross profit is more. And that gross profit you can enter in P&L account. So obviously your net profit is also more. Same way, if their intention is vice versa, then they will undervalue the stock. This is very common in companies. Other objectives. So we finished main objective, subsidiary objectives. Then other objectives. In that one, first is to provide information to the income tax authority. So for companies, audit is compulsory. And now quarterly, they have to submit the reports to shareholders also. They have to pay advance tax also. So this is one of the objective, and it is other objective, but it is important for all. Second is to satisfy the provision of the Company Act. It is compulsory. In Company Act, it is clearly mentioned that to audit the report is compulsory. So they have no option. And another one is to have moral effects. If the person has the fear that another authority will check my transaction or will check my actions, that time he will do his work nicely and sincerely. So, for moral pressure, audit is needed. So, this is the brief explanation of objectives of audit. Next time, same day, same time in next week, I will give you the idea about types of audit. Thank you very much for kind cooperation, and please keep in mind and remember, subscribe the channel, give your comment, and do favor for the channel. Again, thank you very much, and so nice of you. Have a nice time.